Shares in Microsoft plummeted almost 11% in just one day, and this is after they announced their quarterly earnings report, where revenue was actually way above analyst estimates at $81.3 billion, $1 billion more than analysts thought. And then also earnings per share was massively over analyst estimates as well, at $4.14 per share when estimates were $3.93 per share. And so despite this, the share price plummeted from around $480 to around $421 per share, meaning that around $357 billion was wiped off of the company's market share. And so how could this be, given that the revenues were so strong? Now, the first thing that caused this big plummet was that CapEx spending was up 66% compared to the same quarter last year to around $37.5 billion. And the bulk of this was down to spending so much on building data centers. And so the reason that investors don't like this is because if a company is spending billions and billions of dollars on capital expenditure, then that means there's less money available to be redistributed as profits to the shareholders, which then spooks investors to make them want to sell effectively. And the reason that they're going to be building so many data centers is, of course, because of the amount of predicted AI that they're going to be able to use to generate future profits. And then with this comes an additional risk, as you know, for the last few years, there's been a lot of hype around AI, which has massively increased the share price of companies like Microsoft. But at the moment, we're having a bit of a show me the money period where, after all this hype, investors are expecting to start to see some benefits from AI, but they're not quite seeing exactly what they were hoping for in terms of the additional profits and efficiency that they're generating in big companies like Microsoft. And also another issue Microsoft have is that 45% of their commercial backlog of around $625 billion, that is directly linked to OpenAI. And so this massive reliance on one single partner for almost half of the company's future revenue did really spook investors. And this is also shown from their Windows and devices business, which is the more traditional business that Microsoft are famous for. And this actually missed estimates by analysts of around $1 billion in revenue for that quarter. There was also slower than expected growth in the Azure cloud business, which, although this came in at 39%, which is still an absolutely massive figure, it was below what a lot of analysts were expecting. And the company has said that growth is likely to slow in future quarters to around 37 to 38%, which investors didn't like. And then finally, it's that free cash flow was also down in the quarter, down 9% to $5.9 billion. But this is really just because of the massive CapEx that they did have in the quarter. And so comment below what you think about Microsoft. You know, do you think they're going to be able to bounce back pretty quickly from this? Or is this a sign of future weakness of the company, and that now you might see other big tech companies like Microsoft also struggling with their share price, given that investors are now expecting way more in terms of the benefits and the gains from AI?